Hey, everybody. First of all, this is a tricky one. Um, and I'm going to just say big warning if you are sensitive, time to leave this video. And I'd like to just reiterate I do not work for anybody but retail investors. My mission is clear to help others navigate these shark infested waters and find financial freedom. That's all I do. I'm retired. This is my mission. This is what I do. Now, I do hate fake news in the old traditional media. And I've been an absolute distrust of outlets. But now the question is that leaking into crypto media as well? And I've also been stunned as well by the hate that I get from one faction group, and I don't know why. So I've been obsessed with this for a while. Nobody from any other token or any other asset on earth comes after me, except one group. But I'm just going to talk about stuff. And whether you hold Cardano or not, wait till I show you what has happened over the last 2 years. It's something that every investor needs to know. And when it comes to investment, you cannot have emotion. You need to be ruthless. So that's the lesson. So math, money, and freedom. We'll see. So first of all, a little bit of good news. The amount of 0.1 to 1 Bitcoin holders is on the rise. This is good. This is a very good distribution. And part of the conversation today is about how different cohorts hold different amounts of crypto and how they distribute over time. Okay, that's the big message here. We're going to look at a little bit of Bitcoin, Ethereum, Cardano, and compare them all and see if they shake out. So basically, the 0.1 to 1 is the cohort that's holding between $4,000 and $40,000 worth of Bitcoin, or right now it'll be more like $38,000 worth. But it has grown faster than any other cohort over the last month. So it indicates that, per Into the Block, the accumulation is very good. Retail investors are buying. They're putting everything they can into this. And I don't think if I popped it up, but here it is. As you can see, it has grown very dramatically and consistently over time, which is good. So let's talk about what this is about today. So this is an article. It got my attention. ADA whales, Cardano whales, whale holdings in Cardano's ADA token hit record high. Large investors have boosted their coin stash by more than 40% this year. So when I saw this article, it made me think. I said, we need to have a look at the data, because I've seen so many of these articles over time. It's like, what's going on here? Let's dig in and find out exactly what's happening, because that does not jive with the data that I've been looking at over the last year and a half. So let's go. Second of all, you see other articles like this. Cardano becomes the most used blockchain with the lowest fees. Yeah, okay. We got to dig deeper and look into that, but that is clearly dishonest. Now, I don't even know if You Today is even a real rag, but it's just things that popped into my feeds this morning. And there's more, but we'll talk about that. Let's dig into numbers. But one of the things that really blows me away, I was out washing the car yesterday, outdoors, beautiful day, and I'm listening to stuff on my phone. My phone is inside, don't want to get wet, wearing my earpods. And I hear this person, almost with high religious conviction, talking about how Cardano will make you a millionaire and how you only need 30,000 to become a millionaire, or 10,000 Cardano or something. And it's like, if listening to this person would make you want to rush out and buy Cardano. But the question is, why? Why are there so many people that have so much high conviction? Go to Twitter, search ADA. You will see people pumping it every hour of every day. And why? I ask myself, why? And I always say, good stuff sells itself. Think Tesla, think Google, think Bitcoin. It doesn't have marketing departments. It doesn't need them. It sells itself. But why is this stuff pumped now by media so hard? Let's have a look. And let's dig into exactly what's going on. And I know I'm going to get a lot of unsubs and hate for this, but it's very important, everybody, to know where the money is flowing, who is buying, who is selling, and are whales really accumulating over time, okay? That's where we're going. Now, first thing from Into the Block. So this looks nothing out of the ordinary. It says 3 whales, a pretty normal concentration, but a very small number of whales, which is interesting. Second of all, to define what a whale is typically somebody who owns more than 1% of the circulating supply. That's the Into the Block definition. For Bitcoin, it can be a little bit different. It can be a dollar value. Now, the investor definition, there's 3 different cohorts. An investor is somebody who owns between 0.1% and 1% of the circulating supply. Pretty clear. So we have greater than 1%, 0.1 to 1%, and everything below 1% is a retail investor. Now, how many people own more than 1 million Cardano? The answer is there's about 3,014 addresses that own more than 1 million Cardano. But let's get deeper in. Now, the retail investor was just covered, 0.1% or less of the stack. So it's not a lot considering. Now, let's look at the Cardano Holdings distribution. 86% of all the distribution that own Cardano have over 100,000 Cardano own 86% of the total supply. That's a pretty top-heavy concentration when you compare it to other assets. Now let's look at what it looks like on a pie chart. Here you see 95.5% of all Cardano is owned by people with over 10,000, which is pretty heavy. That's a ballpark $10,000 investment. And that's okay, but you can see bigger concentrations. But let's see what has happened over time. So Cardano Holdings, if we look at the top 1% of ADA holders, they own 28.3 billion Cardano, which is 84%. So again, top 1% own a big chunk of Cardano. So let's look. This is the most important slide, actually, or maybe the second most, because the one after this is probably more important. But in the grand scheme of things, what has been happening over the last 2 years with Cardano? Here you can see, if we go back in time, you can see that whales grew a tiny bit in 2022. Yes, this is true. This is what triggered me digging into the article. But look at how whales have shrunk their holdings over the last 2 years. Since January 2020 to today. The whale allocation is green. They used to own a big chunk and now it's dwindled away to almost nothing. The blue investors, they're the people with 0.1% to 1% of Cardano supply, has also gone up and then down. It correlates with the price action. So as the price goes up, they start immediately selling into it and it goes down over time. And the yellow is the retail investor. This is the group that I care about. I care about you guys, literally. And you can see that it has exploded from very little, like about 50%, to 86%. But let's look at it with a different visual so you can get a better feel of what's happened over the last 2 years. When you see this pattern, it is absolutely staggering since January 2022. You can see on the left is January 2020. Retail had 60%, whales 33.3%, incredible number, and investors 6.7%. Today, retail has 88.8%, whales 3.8%, and investors 7.4%. So the easy way to think about this is whales and investors went from 40% of holdings of Cardano to 11% over the last 2 years. They've dumped 9.86 billion on retail investors over the last 2 years. But hold on. Maybe all tokens are dumping on retail investors. Let's have a look at Ethereum. So here you can clearly see the whales have actually exploded in growth. The complete opposite to Cardano. That's the green part of the top. They've actually grown. The investors have shrunk. But you can see that Ethereum has become an institutional asset. Cardano has become a retail asset. I always say, follow the smart money. Follow the big money. They know best. Let's look at the visual. Same pie charts. Ethereum, January 2020 to today. You can see the retail had 60.6% in January 2020. Today they got 57.6%. They've actually shrunk in terms of how much they own. Whales 9.2% to 21.2%. That's a massive increase. So basically, whales have bought 2.38 million from retail over the last 2 years. And investors have gone from 30% to 21%. So the whales have actually exploded in growth for Ethereum. Now, quick conclusion. Again, this is just data from Into the Block, not my data. It could be incorrect, it could be wrong, but there are definitely patterns to be seeing here. And every time you see an article like this that just came out, Cardano whales devour dip, why they don't care about price action. Yeah, they do. Whales know how to time it. They know when to buy cheap and they know when to sell high to retail. And the question is, who is in cahoots with who? Why has there been such a move? Again, going back to this graphic, The delta between retail ownership 2 years ago and today is huge. Whales have shrunk and investors have shrunk. And it's become a complete dump on retail game. From the data, it could be completely wrong. I don't know. But it definitely looks very, very suspicious. So with that, everybody, my job is to help people navigate these shark-infested waters. I'm not calling anybody a shark, but this data is very interesting to look at. And we'll do more of this. Drop a comment below if you want to see more of this type of analysis. But I think this is something we all need to know, and why the army is so strong and why they pump so hard. Don't be left holding the bag if that is the case. And maybe Cardano will take over the world. We don't know. Maybe it'll be the best layer one as we go forward into the future. We don't know. But just be careful out there, everybody. I truly care about you all. Thank you.